Hey guys, welcome back. In today's video, we are talking about the AMC pressure, going parabolic and skyrocketing, the shorts shutting down, and many more in this video. First, take a look at this. All things considered, including Nvidia and AMC price action, there's no doubt in my mind Nvidia is used as collateral for short positions in AMC and other stocks. So one of the things we've talked about in AMC is obviously how big stocks like Nvidia are used as collaterals because they can borrow the money to then suppress AMC. And you can see it reflecting in the price of AMC. Because in times like this, where we are seeing AMC actually fighting right now, because you can see we ended Friday with extreme bullish pressure, but yet on Monday and Tuesday, we were met with both sellers and buyers, but the price was still pushed down with sells. But that's obviously because they need to keep it in line with Nvidia and of course other stocks in which they are using as collateral. So right now we're clearly seeing the panics that are coming from the short sellers as they're trying desperately to push AMC down so that they can obviously still hold on to their margin positions. And the reason why I'm talking about this, and I want to bring it over to this particular picture over here, is just showcasing what AMC investors are willing to do and really how strong the investor base is. So normally in our videos, we obviously showcase, some people buying into AMC shares, and you can see it's on a very regular kind of occurrence. And over here, what we're seeing is another 50 shares bought. Now, the reason why I want to highlight this is because whilst 50 shares obviously is tiny in comparison to the whole flow, the total market value of AMC, you have to understand that this is only one of the many apes who are constantly buying. This isn't a complete new position. This isn't 50 shares that they've only begun to buy. But this is 50 shares that are added on to their existing positions that are obviously out there. And the reason why I always, again, highlight on this is because there are multiple people doing this. Again, if you watch my videos, you will know that this ranges from anywhere between 10 shares all the way up to thousands of shares. Now, the point I'm trying to make isn't the fact that you should be buying thousands of shares every single time. That's not the point. But it's to understand in terms of the investor sentiment for AMC. And it's that the investor base, it's that the apes are continuously willing to buy. And this is why we're seeing this kind of volatility coming in. This is why we're seeing, you can see these two long wicks obviously showing that buyers came through before the price was pushed down. And this is to showcase that when the market is going down, AMC should be going up, but they need to suppress it so that it aligns with their capital. And when we're also seeing the stocks like Nvidia to also go up, we're still seeing not AMC go up, but we're still seeing the same price action because they are worried about what it does to the margin. And so it's to really highlight kind of the power of the apes, is to highlight the power of the investors that are in this community, to show that why shorts have been continuously scared and why they have never closed. You can see dark pools going parabolic while retail gets spoon-fed garbage about fair markets. You can see this says it all. Public exchanges flatlining, dark pool volume skyrocketing. And this is to obviously then talk about how they don't want to see real price discovery. They don't want the retail to set the market because they understand that retail, whilst they may not have the power to put in $100 million at once, they have that power to gradually build up hundreds and hundreds of millions of dollars over time. And that's in fact what we have done. And hence why they can't allow AMC to obviously have real price discovery and why they need to suppress it despite what the market is doing. And you can see here, shorts never close, shorts can never close. And so this is to obviously reflect back on the recent things we talked about with Citadel and again, other short sellers as well. And we talked about how Citadel's positions are to be examined. And we saw a various amount of firms to actually get subpoenaed. Now, one of which was obviously NASDAQ. And you can see this. NASDAQ is reportedly shutting down its high-speed trading service. The Financial Times report NASDAQ is accused of only offering the service to select clients. Now, I want to, before we go on further and talk about this, is that the news coverage on this is very, very minimal. And any videos that I talk about that has got to relate with cases like this, I can also see that it's being suppressed as opposed to other videos when we don't cover these things. And there's clearly a telling of why this is happening. Because you can see this comes after days after NASDAQ is subpoenaed in the MMTLP bankruptcy case. And you can see the exchange has been marketing a faster fiber optic cable that cuts trade execution time by up to a third, but the service was not publicly disclosed, sparking complaints from competitors, the report stated. Now, for those of you who obviously don't know, this isn't related with, of course, how certain firms get access to this. And you can see how pair this up, of course, with the high frequency trading algorithms. And we've talked about in the past how they use these algorithms to suppress AMC. You can understand what is happening. And you can see right after they get subpoenaed, after a stock that was suffering spoofing, naked shorting, high frequency trading, we're now seeing them actually shutting down. So you can understand why this coverage was obviously minimal. We're obviously seeing people like Kristen who are covering this and others, but you can actually see, whilst this is actually what I would like to call major news, because it sparks in terms of the understanding of how firms are able to manipulate and exploit certain things that are only offered for them to obviously exploit retail investors. And that's why people are worried of everyone, of course, seeing this. And another thing to be worrying about is, as we're seeing this trading service being shut down, we also have other major problems for the short sellers. You can see when extend and pretend can no longer work, they turn on each other. The commercial real estate bomb I've been talking about is going to get really interesting soon. Well, we're seeing Wells Fargo sues JP Morgan over troubled $481 million real estate loan. So the commercial real estate is something that we have been talking about because this market is possibly one of the biggest markets in which a lot of value, a lot of assets are obviously there and have been used as collaterals. So at the start, we talked about stocks like Nvidia are used as collaterals, but commercial real estate is also something that's being used. And it's something that we have been highlighting on this channel. And you can also see with trillions in outstanding commercial real estate loan, the official and of the BTFP could be trouble. BTFP loans were a liquidity source for banks, credit unions, and other financial institutions that as of today has completely dried up. The last bank term lending program loans given out on March 11th of 2024 has to be paid back by today. They had 1 year to pay off the loans. And so this was actually something we actually did cover last year as well to talk about the worrying factors. It was to highlight the illiquidity issue that was obviously in the market. And you can see why it's beginning to be a problem. Already, we just talked about how Wells Fargo is obviously sues JP Morgan. But it's to also understand, firstly, the values that is at stake that are, of course, trillions. Secondly, is about understanding that this was a liquidity source for banks and, of course, financial institutions. And so you can see how this is obviously a worrying problem. And the reason for this is because, first, we know banks use this as a liquidity source. Now, what do banks do with the liquidity? Well, one of the things we've known is that they obviously lend out to institutions like short sellers. Short sellers then use that liquidity to suppress stocks like AMC. But also, this was obviously a liquidity source for the financial institutions as well, that again are using it to suppress AMC and GME and of course others as well. Now here's where it obviously gets interesting. As we're seeing this becoming more and more of a problem, we're seeing that this liquidity source which was once, used frequently by these institutions, is now gone to zero. And so shorts are in a position where they're stuck for liquidity. And again, highlighting back to what we talked about Nvidia, highlighting back to why we talked about the suppression that's happening on AMC, you understand why it's becoming a problem. You understand why shorts when paired up with the fact that they're shutting down the high-speed trading service, when paired up with the fact that they have zero liquidity, you understand why shorts are shutting down. And so this obviously relates to what we talked about as well, why it's a worrying problem for companies like Citadel who are getting subpoenaed. And again, it explains as of why Citadel needed to actually borrow money in order to actually pay back their investors, despite saying they made millions or billions of dollars in profit. And so this is what we talked about with how things are slowly starting to build up. What we talked about at the start with how even 50 shares, and again, when made by multiple people and gradually stacking up, is a worrying problem for the shorts. It is kind of the nuke that we wanted to obviously beat these shorts. It may not explode instantly, but gradually, as we build up more pressure, as we build up more ammo, more ammunition, more firepower, more gunpowder, that's really going to make that damage and impact these short sellers. But yeah, guys, thanks for watching the video. I'll catch you guys next time.